Netflix, ticker symbol NFLX, will be reporting earnings today, January 23rd, after hours. So in less than 1 hour. So in this video, we will review the unusual options activity to find out how the wealthy investors are trading Netflix for earnings, and then show everyone how we are going to be trading earnings for Netflix. So without further ado, let's get to the data as usual. So when we take a look at the options time and sales tape, we can see here that the quantity is not so high. You can see here that the most today was 528, and then we have another one here for 500. Okay, these are the same, done by same traders. So there's 2 trades here. Okay, so we'll go over these 2, and then the third one we'll go over the more meaningful one that was actually not done today. Then we'll go over our trade based on our final analysis result. Okay, so the first one here, we can see here, this is expiring very, very soon, January 26th, so that's in just 3 days. So this is clearly an earnings trade. We can see here selling the puts at the 390 and buying the 380 puts. Okay, so what does this spread mean? Well, let's take a look. January 26th, this is 3 days away. 390s are over here. So they're essentially selling the 390s and then buying the 380s. Okay, so this is what their trade looks like. When you analyze this trade, you can see that this is selling a put spread. Okay, essentially they'll be profitable as long as Netflix doesn't drop below 390, right? So this is high probability but very low rewards. You can see that the reward is just $9, right, per trade. So this is selling a put spread. More of a volatility play here, okay, because volatility will decrease after earnings. Okay, so this is not very meaningful for us to trade, but it is something to point out so that we understand what kind of noise distracts our analysis of what could be more meaningful. Okay, so here we are for the second set here, February 16, 500 contracts, 525 calls, 445 puts. What are they doing here? Let's take a look. February 16. This is 24 days away. And for this one here, we can see the 525 over here. Because the open interest is $7.99, there is a possibility that these are closing trades. But it's more likely that they are opening since they are reporting earnings. And if they are opening, we believe they were selling these 525 strike calls. Okay, selling calls because of the volatility. And then they're using that credit to buy the 445 strike puts. Again, open interest 895 is greater than 500, so these could be closing trades. So this is what we think this trade is. When you analyze this trade, you can see that this is essentially a hedge. Okay, the trade will be profitable as long as Netflix does not break 530 at expiration February 16. And so if the stock goes down, currently trading at 490, you can see that this trade does become profitable because this is a short position here, okay, with a negative 51 delta, okay? But keep in mind though that this type of trade, Netflix can still rally to 520. Even at 520, it will still be a profitable trade because you can see that the blue line is actually above the zero here, which is a profit. Okay, so it's not very bearish, even though it is a negative delta trade. Okay, and third but not least, let's go over the one that we think is a little bit more meaningful. That happened yesterday. Okay, January 22, February 16 expiration cycle. These were the 485 strike calls. There was about 1,000 contracts. Okay, notice the open interest is 1,100. And when we take a look at the 485 strike calls, they are now at 2,000. So we know that there is a higher chance that the trade yesterday was opening trades. And we believe that that trade where they paid $2,510 for each contract, those 1,000 contracts, they were buying these calls. Okay, 2,510 times 1,000 contracts, that's about $2.5 million. Okay, so based on this, if they're buying these calls at the 485s, you can see that this is clearly a bullish trade, buying call options, okay, with a positive 56 delta. Okay, and this trade is also a lot more risky than the one we had just analyzed. These, because you can see that this trade has a lot of leeway here. At 4.9, it could go up all the way up to here. It could go down and it'll be profitable. So it has a lot of possibility of profit here. Okay, whereas this trade, very risky. 490 has to go up for it to be profitable. If it goes down, it's an immediate loss. So why is this wealthy investor trading like this? Because they think it's going to go up. And that's why they're willing to take that risk, because they want to get a better payoff, better rewards. Okay, so based on this, we want to also go long, bullish on Netflix. And the way we are trading Netflix based on this is a very simple strategy that we typically like to use for earnings. It expires January 26th, 3 days away. We can decide how much we want to put. You can see this is the 515 strike price calls. For each of our trades, we sell 2 of these, and then we buy the 510 strike calls, one of them, and one of the 517.5 strike calls. And when you analyze this trade, you can see that each of these trades, they cost about 90, although we actually were able to get it for a lot cheaper. Yeah, there it is. That's the price we got it at. $83. Okay, so you can get it at 83. You can see this. And essentially because you can get it at 83, and you can see the max profit at 162 here, you essentially could make 200% because 83, twice as much of that is around 165. All right. So that is what this trade is all about. It has a risk to reward ratio of about 1 to 2. You can see that our delta is also positive. It's a positive 1 since we are going to go long on this trade. Okay. And you'll see also that we have the potential to also make quite a lot over here if we end up here around expiration. Okay, you can see that this would give us profit about 308. Okay, so so let's lock this price in so it doesn't move around. But right now you can see you can also be able to trade this at $80 also. So around that price range is for these broken wing butterfly trades. And we don't risk very much because this is an earnings trade. Okay, so all earnings trades, we don't want to put too much at risk because earnings carries an intrinsic risk. It's a much riskier trade in comparison to our high probability of profit trades that we share with our members only. If you are interested in those stock picks that have that type of data, where we do this same type of analysis work and then share it with our members, so you can get an edge and trade the best stocks in the market that the wealthy investors are trading. Take a look at our website. We'll put a link at the top here. And let us know in the comments below what you think will happen to Netflix for earnings. Will it go up or will it go down? And as usual, please smash the like button, subscribe if you haven't, and hit the bell icon if you want to be notified of unusual auction activity. Take care and have a great day.